Hello friends, hope you're doing good. Welcome back to my channel. So if you feel I'm talking a little bit slowly, please, you can watch it in 1.5 to 1.5x speed. So before I start, this is a disclaimer. I'm not a SEBI registered, no financial advisor, and this is not a no buy or sell call. Just, I'm making this video for the education purpose and to, you can also brainstorm yourself whether the analysis is correct or not, and then you can take the help of the financial advisor to take a decision. So today's topic is about South Indian Bank. So I'm actually giving you the different fundamental analysis of South Indian Bank, and also I am giving the reason about undervaluation as well as the price targets. What can be achieved in a if everything goes right as per my analysis. So South Indian Bank actually is, as you can see, it started actually in Kerala, but it has actually ventured into all over India now. As you can see, these are all the different branches what they got, but still it is concentrated almost like 500 branches are in Kerala, of course, and now it is actually venturing into different uh, states of India. So they've got 944 branches as on this is actually from October 2023, and they've got an employee strength of almost 9,962 employees are there October 2023 as on that date, and also they've got a very good experience workforce. So you can see here greater than 10 years. So there are actually almost like 37% and 5 to 10 years, so almost like 27% of the employees are with having with that experience, and 2 to 5 is actually 16%. That's really good thing. So just I would like to brief about Mr. Murali Ramakrishnan. So actually South Indian Bank in the past was always struggling. So they used to go some good level, and afterwards because of the NPAs and other things, bad loans and other things, it always used to come down. So when Mr. Murali Ramakrishnan joined in the year of 2020, then actually this he has actually set up some transformation goals with individual criterias, and then actually based on this only the bank is still working. Just to give you the details. So this is what he has actually uh, had this targets. For example, if I see the advances, the loan book should be 1 lakh crores. So currently, as on October 2023, this is the vision, and it is 74,947. I think looks like it is on track, and CASA ratio actually 35 plus. It's also on track, looks like, and PCR, provision coverage ratio. Excluding the write-offs, so it should be 66 percent as of now, but actually it says it's 65. It's already achieved. NIM, net interest margin, is saying 3.5 plus, it's 3.33, it is on track. And profitability, ROA and ROE wanted, he has kept a target of 1 and 13.43, I think. Yeah, these are all the, but actually these are also on track. Actually, these two values are analyzed, annualized. Just to give the key highlights of the transformation, what has happened between October 2020 when he joined and September 2023. 23. This is the quarter end slide. So this is the provision coverage ratio, including write-off. It is 77%, and without write-off, it's already achieved. The target was 65, and it's already achieved 66. So because of the flood as well as COVID and other things, so the NPAs were too much earlier. Now you can see here it was almost like 7%. Now it is keep on coming down, as you can see, each quarter. And very good thing here is they also done the provisioning and other things. That's why the net NPA has really come down now. It's 1.7%. So this is also actually also this the fund requirements which RBI has specified. I think it should be 12% or something. So this is also at very good level, and I think 16.69%. I think they've got enough money cash available for them as per the RBI rules. And apart from this, very good thing is about he had put a target, another target, but he was always very much concerned about the NPAs. That's why they have actually started, monitoring this A and above rated large corporate loans. If you lend it to them, if they've already got the rating, and if it is A and above, then the NPA chances are less. So you can see here, as of September 2023, this is definitely good point. 96% of the lending, whatever they're done to the corporate companies, they're all very good rated ones. And in terms of positives, so they are really good in digitalization, because 97% of the transaction happened online, and also they've got a very good granular good deposit base, as well as corporate lending. As I said, let's quickly check that. As I said, well distributed deposit base. As you can see here, this is a retail term loan. This is red part, and next one is the savings, and this is the current accounts, and this is the bulk. Bulk is very less, as portion of 97,000, 3,000 is bulk deposit. That is nothing. If you have retail deposits, usually they are sticky, and they are really they're not big size tickets. That's why even if they withdraw one or two FDs and other things, it will not impact much. But in case of bulky ones, for example, it will be 500,000 crores like that. If someone withdraws it, it will actually impact the CASA ratio and other things. That means free money what is available for the bank to lend, that will reduce. That's why I think this deposit is really good. It's well granular retail. So they are actually really getting good transformation, or the turnaround is happening here, I would say. You can also see, actually, if you see in the Kerala and all, there are a lot of Keralites are at on site. They are keeping a lot of deposits. NRIs, NRIs. They are actually keeping a lot of money here. That's actually been mentioned here. And digital banking, as I said, 97% of the transactions are happening. It is day by day increasing, are happening digitally, without the branch visit and other things. So if the lot of people are not visiting the branches, the cost will reduce. They don't need to have so many employees. That will reduce its cost to them. Similarly, you can see here internet, mobile, and these are all really getting better. This is also one good point. Corporate lending, as I said, so you can see here, this is the box where actually it says that what are the different kinds of ratings corporates. AAA means this is really good, AA is also good, A is also good, B and these ratings are not so good. But you can see here, it's very 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 small portion. I think earlier it was there, but now day by day they're getting better. I mean, they're recognizing and only lending to the very good rated companies. So this is always good. And also 1 crore and above also, I mean, as you can see, it's also getting better. So this is also another good point or positive news to the bank. Risk, as I said, I think first one is 50% of the branches are in Kerala. So it's very risky, because earlier there was a flood situation, and because of that the NPAs are increased. But as I showed you in the first slide, I think it is getting better. They are also going into different uh, states. So actually, when I was traveling from airport to city in Bangalore, so I had seen a lot of hoardings, with advertisements of South Indian Bank. They were really good in, they started advertising a lot, and they are getting into a lot of cities, as well as a lot of states as well. That will definitely help them. So another risk factor is, as I said, the Mr. Murali Ramakrishnan. So he has actually stepped out as of September 2023. Even though he had got a very good vision, and he was put up base for transforming this bank into a good bank. But somehow I don't know what happened. Maybe, I mean, what was quoted in the uh, that notification to BSE, it was saying that he is leaving the company due to personal reasons. But we are also not sure whether there was any tug of war between the board of directors and Mr. Murali Ramakrishnan. That is kind of a bad thing. But actually, there is also new CEO and MD who joined from 1st of October 2023 onwards. So Mr. PR Sheshadri, so he is also, I mean, if you look at his profile, he has also got very very good experience. So So he was also MD and CEO of Karur, Vaisya Bank before joining here. Apart from that, if you just search his profile, he's also looks like very very capable. He's almost like got 30 years of experience in the banking and financial industry. So I would say it's a risk, of course, because it's a new management, and also the vision and other things from the previous management. So I would say, it just the new CEO's job is to whatever the vision was there put across by Mr. Murli Krishnan, then that has to be taken forward. I hope. I think since the basement is laid on, so it should work. Anyway, this is just I want to mention, this there is a management change like that. Now, just let's come to the last part, just to check the valuation on the conclusion. So as for me, I think this is also, old slide from the, screener.com. It is not up to date, but however, if you see, PE ratio is currently 6. Even if you compare, the book value and other things where actually it is wrong. If I also given the correct book value in the next slide. But if you see, usually banks average PE will be around 20. If you see ICICI Bank, HDFC Bank, and all these banks, they are actually trading at a price to earning ratio of 20. But currently, this South Indian Bank is actually currently trading at 6, and current price is 26.3, and book value is 33.9, which I'll show in the next slide from the presentation. And market cap, this is really very very good. This is a private bank, and if whatever the transformation or turnaround criteria what has been put on by Mr. Murali Ramakrishnan, if it is on track and if the bank is able to achieve that, then this is very very cheap. You want to get a bank license, it's difficult in India because RBI is not issuing new bank loans so easily. Even the corporates are not allowed to take the banking license and other things. That's why whatever the banks are there, they should definitely grow and grow. Now onwards, this 5,000 market cap is nothing. You want to, I mean, first of all, you don't get a license, and 5,000 is very very small cap bank. This is also a very good thing. Another thing is, the number of shares is also less. For example, if you see IDFC First Bank, it has got a number of shares of 700 crores, but this is less. And here, usually banks are actually valuated based on the price to book value, but this is 0.82 as of now. I mean, if you calculate the current book value, it is 0.78. But usually the banks will have an average, price to book ratio of 2 to 3. But this is 0.78 meeting. Think of it. This is really and really very very undervalued. That's what it's very very undervalued. Now this is the presentation from September 2023. This is already 34. 33.9 is the book value. So you see, after this, anyway, we're already in January. In few days' time, they're going to declare the result. So if you can see 1 rupee, every quarter it is increasing. Even if you say it increases to 35, as of now, January 2024, even if you give a price to book value of 2, as I said, the price should become 70. uh, Currently the price is 26. You can think of it's already, it should double, from here, double or 2.5 times. So if if you give a valuation of 2.5 price to book value and a optimistic way, then the price should become 35 into 2.5. So it should become 105. 105 is already 3 to 4x from here. uh, so it's for me, it's not no brainer. It should definitely become multi-bagger. Of course, whatever the risk I have said, you need to consider that, and also the bank should grow. This valuation what I given you is based on the price to book value, and also given next valuation based on the earnings per share. As you can see here, the earnings per share is already 4.6 as on September. But you can see they are almost growing at 3.9, yeah, 70 paise per quarter they are growing earnings per share. So for my calculation, because they are saying financial year 25 end, that means we are in 2024 January. So by 2025 March quarter end, so that is where the that vision, whatever he has put, that will end. So still we have 10 quarters. So I would definitely, I'm very, very optimistic that it can reach, uh, earnings per share of 8 rupees. So even if you give a price to earning ratio of, 8 into 15, if you give on a conservative way, the price should become 15 into 8, it should become 120. So if you just give an optimistic view, that means all other bank, HDFC, ICICI Bank, IDFC First Bank, if all other banks are also trading at 20, since this is also a private bank, if you give a price to book value of 20, 20 into 8, the price should become 160. Now the price is 26. You can think if the price becomes 160, it's how many packets you can calculate yourself. For me, it is kind of a no-brainer. This will definitely should become a multi-bagger. But as always, you should talk to your financial advisor and take a decision. Please subscribe and also please press the bell icon so that you will also get the notification for my next videos. Thanks for supporting. Bye for now.